afternoon, everyone. Thank you so much for tuning in for the lesson tonight. It's going to be a bit of an interesting one. We're going to be going through staking and really all the different ways that that word is kind of employed because staking has become a bit of a vague term. And so, before we get into any of that, though, got to go through the hellos. David, you definitely have continued to achieve the earliest to arrive in class, and so the attendance award I think is currently leaning towards David. Kukla, thank you so much for jumping in today, and of course, Bear, thank you for joining. Happy to see you. And David, honestly, I'm really hungry. So if you got a little bit of extra when it comes to the yellow rice and the ground beef, you may say it's not that special, but I am awfully hungry at the moment. Bear775. Zester, which crypto site has the highest limits to purchase and move to outside wallet? That's actually that's an interesting question, Bear. Each different exchange is going to have a different minimum and maximum. To my knowledge, really, if you wanted to look and you wanted to find the absolute highest ones, they're going to be the institutional accounts. So those are accounts specifically designed for businesses. When it comes to the average individual account, it's usually based off of each different cryptocurrency. And so if the cryptocurrency has a particularly small market cap, and so it's a small crypto, very often the withdrawal fees that they associate with it are going to be higher. And that is just because there is a lack of liquidity and it's a more volatile cryptocurrency. And so, Bear, I know when it comes down to it, something like Coinbase is not going to have any requirements on what they're going to make you withdraw in a single go. But even sites like Coinbase will have minimum trading requirements. And so they won't let you trade a 50 cents maybe of a very, very small cryptocurrency. They'll have an issue with that. You'll have to go through the advanced trading tab if you want to go through and actually trade some of these really, really small amounts of certain cryptos. Kukla, making shrimp and angel hair pasta with garlic bread. Well, now I'm just hungry, guys. Now I am just hungry. I wonder if Mark will pop in. I know that I was just talking to him right before the stream started, and so he very easily may. He very easily may, but I am not certain. Neil, howdy from Graham, North Kakalaki. Thank you so much for tuning in, Neil. I'm enjoying the North Carolina update each time that you join the streams, Neil, and so gonna have to start asking you what the weather's like back home. Good evening, Mile High Trish. Thank you so much for joining, and blessed to be blessed. Thank you as well, and Karen and Grumpy. Glad that you made it. Overcoming victory. Good evening, Pirate to Godly. Like the cut, Zester. Thank you very much. I did finally I got sheared, and in all honesty, it really looked like I was a sheep at the end of it because that was a lot of hair. That is a lot of hair. I am feeling like I lost a few pounds at the moment. Oh, good evening, George and Donna. All right, Karen, Sunrise. Thank you guys so much for joining in. Neil Brooks asks, Esther, do you think Uphold will ever support Theta? I have lost a couple $100 trying to put Theta on my Ledger X. Well, first of all, I'm very, very, very sorry to hear that you have lost any trying to send over to Ledger. When it comes to Theta, Theta is sitting inside of kind of a weird little space. I'm actually going to try and do a double check real quick. And yes, Theta remains no longer on, or well, not available on Ledger in terms of their layer 1 blockchain. And so when it comes to Theta right now, Neil, unfortunately, it's really on the Theta team. And so whenever you're adding in the ability for your cryptocurrency, if you're a layer 1, because Theta since 2019 has been a layer 1, which makes it Theta coin, not Theta token. They operate their own blockchain. Ever since that point, it essentially is on them to work with the hardware wallet companies in order to allow integration. And so I am not quite certain why Theta has not worked with Ledger at this point. That seems kind of like a bit of a lapse on the Theta team's part. But at this point, if I were going to be continuing to hold my Theta anywhere, it is one of the very few situations where I would probably keep it on a exchange. And the reason being is just because there's just not really a lot of great options about how to safely hold your Theta unless it's one of the mirrored versions of Theta. And so Theta has been mirrored onto other blockchains. In that case, you are capable of keeping your mirrored Theta on a different part of your Ledger wallet. I am not a fan of mirrored assets when it comes to holding it. And so when I say mirrored assets, what I mean is when you have something like XRP, we'll use it as an example, and then XRP creates the ability for you to have a copy, a clone on, say, the Binance blockchain. And so you now have a Binance XRP. And so there are a lot of reasons that you would want to hold that. I mean, maybe you're trying to stake it in terms of a liquidity pool on the Binance Smart Chain, or maybe you want to take advantage of some other application that you could then utilize your XRP for on a different blockchain. But if I'm holding that cryptocurrency and planning on keeping it for the long term, I really don't like having a mirrored asset. I would rather just have the real version. It's the same idea that we've been seeing with Lobster, where many people have mirrored versions of cryptocurrencies on Lobster. And so they want to remove their Ethereum from Lobster, but their Ethereum is Stellar Ethereum. And that is making it very, very complicated for them to actually remove their cryptocurrency from a platform like Lobster and Uphold. And so whenever it comes down to it, these different mirrored assets, there are reasons to hold them. But if you are planning on holding something for a long time, I would highly suggest always making certain that you are holding it in the native cryptocurrency. And so when I say native, that means, as an example, like Ethereum. Ethereum on the Ethereum blockchain, that is the native cryptocurrency of the Ethereum chain. Ethereum on, say, Binance, or Ethereum on Polygon, or Ethereum on any other blockchain is not native. It is a mirrored asset. And so I know that gets very, very complicated when it comes down to it, but it really isn't. It's kind of like the same idea of someone giving you a representation of a dollar. And so, I gave you $1 and you gave me 4 quarters in Chuck E. Cheese money. My 4 tokens represent $1. And the only person that's willing to give me $1 back for it is going to be Chuck E. Cheese. It's the same idea with cryptocurrency with these mirrored assets. So if I go to a company and I say, hey, I would like to mirror my XRP onto the Ethereum blockchain or the Binance blockchain, effectively what I've done is I've gone to them and I said, here's my XRP. Please give me Chuck E. Cheese tokens on the other side. There are many, many applications for it, but it is not what I would consider doing in terms of a long-term hold. If you're planning on holding a cryptocurrency for a very long time, you're better off getting the native asset. Oh, hey, Kukla Zester is wearing his whiskey and wisdom early. I am ready for it. It has been a long, long day of work, Kukla. I am looking forward to letting loose a little bit and enjoying Whiskey and Wisdom Wednesday. And so I cannot wait for that to occur. And of course, it is important. Thank you, Kukla, as always, for reminding me that nothing that is in any way expressed from me on this channel should ever be misconstrued as financial advice. It is entirely for entertainment purposes alone. And so definitely do your own research, consult a financial professional. If you have any questions in regards to anything that is said in regards to the stream today. And so, never a fun one, but in a very, very important one. So thank you, Kukla, as always. Karen Dunn says, I'm currently in Gastonia, North Carolina. Oh, so you're right near Charlotte, not far at all, to my knowledge. Or maybe I'm mixing that one up with Gastonia and a different county. From Cherryville, currently mild, but just under 60 degrees Fahrenheit, off and on misting rain. That doesn't sound too bad. That doesn't sound too bad, Karen. I've heard that the pollen has started to drop something awful up there in North Carolina all the way up to Pennsylvania. So I don't know if that's what you're currently looking at, Karen, but I'm hearing that the world is slowly turning pollen-colored yellow at this point in time. All right. Absolutely, Kukla. Thank you as well for that one. Definitely hit the like button, the share button, the subscribe button, whichever one applies. It's greatly appreciated. Right. Think of it like R&R railroad token that you owned Monopoly. There you go. There you go. Exactly. Yeah. I always made certain that I had the Reading Railroad. It's sad I played so many games of Monopoly, and yet I still at this point in my life, I have definitely forgotten a few names. I forget the different railroads. I remember Reading Railroad. Valentino is doing well. He has been irritating the ever living junk out of me over the past day or so. He has discovered just how much fun toilet paper is to run around the house with. And so he has been, enjoying this newfound knowledge. I woke up this morning to a toilet paper roll that was somehow managed to stretch from every corner of the house. And I am assuming that he had an absolute blast last night, but he has been being a stinker. He has definitely been being a stinker to me yesterday and today. And so he is, of course, sitting in his normal spot, watching me work throughout the day. And I think he can tell I'm a little irritated with him because he's been being a little reserved throughout the day. But he's forgiven. He's forgiven. And now all of the toilet paper is kept far out of reach. David, yeah, yum, that would be good. Would have told you earlier, but it's not nice to talk with food in your mouth. Ah, you jerk. That just made me even hungrier, David. Just made me even hungrier. George says, I wish it would be easy to buy Myota or IOTA and out it in Ledger. And I have Hedera on Coinbase and want to put it on Ledger. Actually, George, I can jump in real quick and show you how to do that one. Before we go into everything else, after we get through some of the hellos and everything of that nature, I will jump in real quick and show you what you need to do in regards to get your Hedera off of Coinbase and onto your Ledger. Actually, have had a lot of comments from people in the community asking about their HBAR or Hedera, and also people asking about their XDC. And I have found the answers now for all of those folks that are having an issue getting those over to Ledger. Those are both cryptocurrencies that I personally do not hold. And so I had to do a little bit of research to make certain that I was getting the answer right. But I have got it now. Stephanie, stinks for you, but that is funny. It was funny. I was angry at first when I woke up, and then I had a good laugh for a second as I wandered around picking up toilet paper throughout the house. I've made certain to pay him back by waking him up from every nap he's tried to take today, and so maybe that's my passive aggressive way of getting back at him. But whenever I see him lay down next to me and start napping, I just go ahead and mess with him for a second. Karen Dunn says, you're correct. Only Lowell and Belmont between me and Charlotte. And yes, definitely pollen. It's that time of the year. It's that time of the year. The East Coast turns yellow. It absolutely does. And it is the one time of the year that ensures my allergies inside of the States go nuts. I always seem to get sick. Every time that spring is sprung, I somehow manage to get sick. It's just because of the allergies. I'm allergic to grass inside of the United States. So I'm specifically allergic to the 7 different types of grass that grow in the southern United States. So it's a guarantee that I'm going to get a little bit sick. Luckily, having moved down to Puerto Rico, I no longer have that issue anymore. So I am lucky in regards to that one. And so before we jump into the news, let's actually help George out real quick, because I know that it is far more than just you, George. This has been a question I've received a lot of times. And so let's go ahead and get up our Ledger Live. And so once we are inside of Ledger Live, our first one would be Hedera. And so if we were interested in getting our Hedera off of a site like Coinbase, George, all we would do is we would come right here and we would install Hedera. And so that's all we need to do. We can quickly, I will actually go through and I'll type in my password, and we'll do this one real quick live just so that everyone can see it, because I know there are enough members of the community that have had an issue with it that it is worth showing. And so if you were trying to get your H-bar off of Coinbase, all you need to do is you need to come over to My Ledger inside of your Ledger Live. And so, you start out in your portfolio, you come down, you click My Ledger, which is hiding right over here. So My Ledger, click on that. Of course, it's going to take a second. And then Hedera. And then we're going to see Hedera H-bar pop up right here, George. We're going to click Install. And it's giving us, we're going through the process. We're installing. All right. Now that we have got it, we are going to click Add Account. And as we do that, we are going to need to confirm, of course, on our actual Ledger device. And so I just clicked Confirm. And, well, it seems as if there appears to be an issue with Hedera. Why is that the case? Let's see what the problem is. Well, that is a particularly confusing one. And so, George, I'm starting to see why there may be an issue when it comes to Hedera. It seems as if their application is not properly updated. And so we're capable of coming down here and actually opening it up, and yet for some reason we're not receiving the ability to actually access it. And so, George, it looks like it is not just a you issue in the slightest. It appears to be very much a Hedera issue. But let's see, though. We still have it. So we have downloaded the Hedera application. We come back to accounts. We do not have Hedera here. No, and we continue to not have Hedera. And so let's see. I'm opening the app on my hardware wallet. So it appears as if we have a support article actually that we would need to go through. And so Hashpack does not provide. Let's just support on Firefox is installed. Okay, yeah, I can completely understand now, George, why there is an issue with you and your Hedera. And so I am going to be going through and trying to decipher what the heck is going on here, because it should have been nothing more than a matter of downloading the wallet and the account. There's not a single cryptocurrency on Ledger that does not work that way. But this is definitely providing the answers to all these questions I've been receiving. Because what I'm seeing right here is that it is an extremely complicated process to actually get your Ledger hardware wallet set up with Hedera. And so going to go ahead and make an assumption that it's going to require an individual video. And so, George, you've just made it to the top of the list, because I know that there were a few others that have been having the same issue. And it has also made me curious. I now actually want to jump over here and try to do the same thing with XDC, because I know people had been asking questions about both of them, and now I'm curious if it's not the same issue on both of these different blockchains. And so we're going to go ahead and also download the XDC network, and we're going to see if it has the same issue as well. All right, we are queued and downloading. So I'm going to go through and see what everybody's been talking about. Oh, HK. All right, guys. Yeah, absolutely. For anyone that does want to get to all of the different links, the link tree is the go-to. All right, though, guys, we are installed. So let's go ahead and see if we enter into the same issue when we choose XDC. Well, I'm beginning to see why everyone's getting so confused. It seems as if when it comes down to both of these different blockchains, that they are going about things in a slightly different fashion than everyone else. And so let's go ahead and learn more once again. All right, search it. And while I select the app catalog, yeah, now I'm beginning to understand why issues are occurring with both XTC and with Hedera. Both of these have made it particularly difficult from the standpoint of Ledger. And so we will definitely be going through then and actually creating an individual video for those, because both of these different explanations are, well, they're a little ridiculous. I'm not quite certain what their limitation is with their technology, but I will figure that one out. And so expect a video that is uniquely designed for just Hedera and just XDC, because it seems as if both of them are operating on essentially the same technology, and that's why we're having an issue with those. So for everyone that has been having that problem, I can definitely confirm that it is not uniquely you. It is not uniquely you. And so with that gone ahead and checked into, let's go ahead and get into the news of the day. But do keep in mind, George and everyone else, that one is now on my list of a problem that needs solved. So I am curious to figure out why they are doing things the way they are. I'm certain they have a good reason. I am certain they have one. All right, so we're going to go ahead and jump into a bit of the news before we go in and we start to talk about what staking means. It's a very vague term in the crypto industry. All right, so looking at our prices, Bitcoin did drop back below 70K. Ethereum as well. I think we went all the way down to 3,300 on Ethereum. I saw prices in the very, very low 68,000s on Bitcoin earlier today. This is one that we really can't point to a specific culprit. It's kind of just more a matter of normal market fluctuations. A lot of money has been bleeding out of Bitcoin. A lot of people that have made a lot of profit on their cryptocurrencies are reallocating their purchases. And so we're seeing a bit more of a shift towards, well, meme coins at the moment. Dogecoin and Shiba both looking strong. Dogecoin up 26.3% in 7 days, 3.2% in the past 24 hours, despite the slight downturn. Don't think there's anything crazy to see here. I know for everyone that was watching on Monday when we made our purchase of Mana, we're sitting at about the exact same point that we actually made our original purchase when it comes to that one. And all of these things are very much logical. When it comes down to it, whenever you look at the prices in regards to cryptocurrencies, whatever Bitcoin is doing, everyone else is doing. And so Bitcoin in the past 24 hours down 1.1%. Of course, Ethereum is down 1.7%. BNB down 0.9%. Solana 2.7%. XRP 2.9%. The vast majority of the time, it's always going to maintain this same rule. Whatever direction Bitcoin is going, everyone else is probably going the same. The only thing that is unique and something that everyone should probably be keeping an eye out for is whenever we do see a time period where Bitcoin trades sideways, that is when we're most likely going to see altcoins, aka your XRP, your Solana, your anything that isn't a Bitcoin or an Ethereum, your altcoins. Whenever you see Bitcoin trading sideways, you're likely to see an altcoin boom. And so that's typically been a major part of each bull cycle inside of the market. And when I say trading sideways, what I mean is that the price of Bitcoin in terms of the trading volume across, or the trading price across all exchanges, is essentially remaining inside of a certain little parameter. And what causes this is a massive amount of resistance above the current price of Bitcoin and a massive amount of resistance right below the price of Bitcoin. And so when I say resistance, what I mean in the case of above the price of Bitcoin, there are a lot of people who are saying, I want to sell at this price. That creates a sell wall resistance. And so that keeps the price of Bitcoin going above that point, because the second that Bitcoin hits that certain parameter, maybe it's 70,000 as an example right now, just because of where prices are currently sitting at. So say there's a major resistance at 70,000. That would mean that the second the price starts to get close, then a bunch of limit orders, sells, are going to trigger, and they're going to push the price back down. It's the same idea for the people that are below the current price of Bitcoin, but they're buying. And so a bunch of people have set limit orders saying they'll buy at 68,000. And so if the price begins to trend down towards 68,000, then those buy orders are triggered, pushing the price back up. And so whenever you end up with that situation where we have a lot of sales on the high end, and we have a lot of buys on the bottom end, that means that Bitcoin is just going to bounce. It's just going to bounce back and forth between the two resistance. As it does that, that does tend to signify that we're going to see a bit of an altcoin boom, because people that are keeping their money inside of Bitcoin are going to start to look at other options. And so that is something that, as we look at this current market, that I would suggest keeping in mind. Would definitely. HK, nice lids. Esther, looking good, my friend. I appreciate it. I appreciate it. David, do you like his new do? He's got his ears lowered. Yep. Yeah, you can actually see him all of a sudden. And Sunrise, the alt swell. Yes, the altcoin market, the altcoin craze is typically going to occur during a time period where we see Bitcoin trading within a fairly close sideways style pattern. And so that just means that Bitcoin's price isn't going north or south. It's not going up or down. It's going side to side. It's headed right. All right. Let's jump back into it, though, with some of our news for the day. And so we do have a bit of a little story here coming out of Coin Telegraph. Bitcoin price falters as macroeconomic and regulatory headwinds mount. I think that really the biggest takeaway here is regulatory headwinds. It seems like when it comes to the news of today and yesterday, we really haven't received anything saying that people that are purchasing or people that are looking to sell are changing their mind. It's really just come down to the fact that we have had some regulations that have been proposed. And so I feel like what people are doing is they are selling / buying the rumor, and they are going to regret it when the news actually comes out. And so Bitcoin spot ETF inflows will be decisive for Bitcoin's price. As they go through it, despite a rally from 63,800 to 70,000 in the 5 days leading up to March 27th, only 151 million in leveraged short positions were forcibly closed in the Bitcoin futures market. This suggests that bears remain cautious, even in light of last week's significant $888 million net withdrawal from U.S. Bitcoin spot ETFs. And so the takeaway here is that while the price has seen a large rise, there was not a major group of investors betting that the price was going to go lower. Essentially, everyone is still making the assumption that we are in a bear market, and that includes the bears. Even the bears think that it's not a bear market, because if there was an assumption that we were going to continue to see a major dip in terms of Bitcoin's pricing, then we would have seen the intelligent investors opening up short positions where they could bet on it. We haven't seen that happen, which is a great indication for everyone who is hoping that the prices continue to go up in the short term, because we do not see major institutions making any type of assumptions that Bitcoin's bull market is going to slow down in the slightest. Continuing along, these are those regulatory issues that they mentioned in the previous article. And so this one comes from crypto.news. Court rejects SEC claim that Coinbase wallet is an unregistered broker. And so SEC has been looking into Coinbase, and specifically they have been actually finding a couple of different issues, they believe. And so I wouldn't say that it's particularly bad news for Coinbase. I wouldn't say that it's particularly good news for Coinbase. Essentially, what the judge went ahead and issued was that he does not believe that Coinbase is meeting their SEC requirements, and believes that they still do, on paper, look as if they are a holding house or AKA a brokerage of some kind, which they are not licensed to be. And so the judge is leaning towards the SEC in regards to the case. I know from doing a bit more research on it that, in all honesty, it does not really look all that negative. If you are a Coinbase holder, a Coinbase stockholder, but I am definitely making an assumption that Coinbase stock did not appreciate the news today. I could be wrong, but seems like a pretty decent bet. And so those are some of the headwinds. SEC is going after Coinbase, the largest U.S. cryptocurrency exchange, and also a happy member of the stock exchange, a publicly traded company inside the United States. And so, continuing on to CoinDesk, amid giant crypto rally, hopes for another DeFi summer soar. And so, for those that are looking towards the decentralized finance space, this is one that definitely is nostalgic for me. Thinking back to 2020 and the insanity that was going on in terms of all of the decentralized finance cryptocurrencies, it was quite the time. And so And this actually kind of ties into what we're going to be talking about later. Coming out on CoinDesk, it is MakerDAO's DAI savings rate provides users with a 15% yield, while riskier corners of DeFi can earn 27% annually through the likes of Athena Labs. And so, as we see a huge boom to decentralized finance occurring once again, what we can take away from back in the DeFi summer of 2020 is that we saw a massive amount of staking opportunities. That's really where a lot of people were making their money in DeFi. They were either purchasing the small cap cryptocurrencies that had really amazing ideas, or they were staking in order to make a bit of money along the way off of everyone else trading and speculating. And so we are looking at the beginning of another real DeFi boom. At least that is what it appears to be indicating. There are a lot of new technologies currently circulating in the space. So, not going to make any assumptions about whether Ian here is completely correct, but I would definitely say that I personally am of the belief that decentralized finance is about to see a serious boom in the coming months, or at least in the next coming year or so. Continuing along the way, Vitalik Buterin has suggested a new way to decentralize Ethereum staking. This was a major announcement coming out of the Ethereum Foundation. It really doesn't change the metrics for the vast majority of folks. This is more an article for those that want to dig into a bit of the technicalities of how Vitalik is making decisions in terms of Ethereum. Continuing on, because keep in mind, guys, as soon as we get through this news real quick, we're going into just staking conversations for the rest. So we happen to have a fair amount of news articles that came out in the past day or so that are also talking about it. Ether.fi's ETH.fi jumps 50% to record, may boost valuations for liquid restaking token airdrops, according to analysts. And so restaking has become one of the hottest sectors in DeFi, with new protocols leveraging Ethereum's proof of stake blockchain to secure other networks. And so what people are doing and what these platforms have created is the ability for someone to go in, stake a whole bunch of Ethereum towards starting a proof of stake node, becoming a miner on the Ethereum blockchain. And they are attempting to tokenize that locked valuation. And so that Ethereum is essentially stuck. You can't do anything with it. And what we're seeing is that a lot of other companies are trying to find a way to utilize that capital. And so it's becoming quite the little boom, and Ether.fi happens to be at the forefront of that one. So as we are going on, let's get to the fun stuff for the day. We're actually going to get to class now. So we've gone through a bit of the news. The news today really wasn't all that much fun. There was not a lot going on in terms of the crypto space. There was a lot of tech talk and not a lot of financial information. Nothing to help us out when making decisions on what we should be holding. But now we're going to jump in to the fun stuff when it comes to staking. Keep in mind that for this afternoon stream, guys, we are not going to stake any crypto. We are going to present the issues, the benefits, the possibilities that staking provides so that everyone is capable of doing a bit of their own research and also having a full understanding of what staking means. When someone says the word that they are going to stake their crypto, what does that actually mean? Because the term has become very, very vague. And so let's go ahead and jump right into it. How to make money with cryptocurrency, 9 strategies. And all right, 9 ways to make money with crypto in 2024. We've got investing, we've got trading, we've got staking, we have lending, we have crypto social media, mining, giveaways, gaming, airdrops, and forks. The important ones here today are really based around lending, staking, and mining. And because all 3 of these have all in a certain way been absorbed by the term stake. And so very often you'll hear people say that they're staking their cryptocurrency. I'm staking it. Well, how are you staking it? What's the money being used for? Well, the money very often could be utilized for mining. So in the case of Ethereum, it's a proof of stake blockchain. And so if you take your Ethereum and you place it inside of a miner node and you collect a percentage return on a yearly basis paid in Ethereum for having done so, you have effectively staked your cryptocurrency, but you are also mining Ethereum. And so that's why this little conversation in class today is so important. It's because staking has kind of become the universal word where people don't really think that they are lending crypto. They think they're staking crypto. What their staked crypto is being used for could be things like the likes of lending or mining. And so, wanted to go ahead and make certain that we had an understanding there that staking is a very, very general term. It could mean a multitude of different possibilities. All right, how to earn passive income through cryptocurrency. And so here we get to even more confusing terms that are very often associated with staking. Yield farming. Yield farming is effectively staking. Yield farming in decentralized finance platforms gives you the power to earn money like a bank by participating directly in a lending process. Here, users connect their cryptocurrency wallets and commit coins and tokens to a pool with others. And so anyone is capable of participating. All you need is a wallet and the proper cryptocurrency. That pool is then used to lend crypto to others for interest and fees. The users are sometimes paid for participating in the lending process or given interest on the amount they stake or hold in their accounts. The amount earned from lending crypto depends on three factors: the loan's duration, the loan's amount, and the interest rate. One other factor that I feel like it was not included in here, the amount earned from lending crypto depends on three factors, would absolutely be the risk factors that are associated with different forms of lending. Is it a high risk loan, or is it a fully collateralized loan where you really don't have anything to risk? And so beyond that one, we also, of course, have a few other All right, everyone. I believe that I am back. I believe that I am back. Just had to run a little emergency route trying to get the internet back up and running. And so if everyone can hear me, please do let me know if I am truly back and running properly. All right, all right, all right. Yeah. It looks as if I am back. Rocker Mom, I am back and working now, it seems. David, I got a blue screen. Yeah, I am not quite certain why the internet just crashed on me that way, but I am back and running. As a matter of fact, I think every single one of my browser windows are all updating at the same time. And so it seems as if everything is back and functioning. Thank you, though, Kukla. Thank you for letting everyone be aware of what was going on that one. I was trying to shoot that text message off to you as fast as possible. So, Mile High Trish, haha, I thought it was me because I was listening and checking out the list of cooking videos on the side. No. That is no problem. And everybody is trying to make me hungry tonight. Trish, what are you cooking now? We know Kukla is making angel hair pasta. We know David is having some beef and rice. I am starving at this point. But let's go ahead and jump right back into it and continue along. And so, Crypto Staking 101. What is staking? And so, not only is it, of course, a popular way to earn passive income, but what you can really think of staking as is the crypto equivalent of putting money in a high yield savings account. When you deposit funds in a savings account, the bank takes that money and typically lends it out to others. In returns for locking that money with the bank, you receive a portion of the interest earned from lending, albeit a very, very low portion. And so when it comes to staking inside of the cryptocurrency space, it's much more than just providing dollars for liquidity for staking in terms of loans or lending. It could also just be providing cryptocurrency and liquidity for a liquidity pool, in which case you're receiving a return because your crypto is facilitating other people trading back and forth. And so that is probably what is most commonly referred to as staking. And that in and of itself is you just going ahead and saying, hey, here is my crypto. I'm going to let you have it for a while. I want it back. I want it back. But while you have it, you can go out there and you can utilize my money to make loans, to provide liquidity, to do all sorts of different things in the financial space. And I expect to receive an interest rate back for it. And so, in the simplest form, staking is just a matter of saying, hey, here's my money. What are you going to do with it? How are you going to make money with it? What is my interest return on participating? And so they give you the rules. They say, this is what we're going to do. This is how we're going to do it. This is how much we think you're going to make. And then you have the choice of either participating or not. For many people that have their cryptocurrencies that they have zero intention of selling, where they're thinking in very much a long-term perspective, staking is an amazing option. Because if you're not worried about selling it anytime soon, then you have no problem locking it up for a couple of years and earning a return throughout that time period. And so, some of the different examples of what people commonly refer to as quote unquote staking. And so, this is a term, guys, that we're going to be going through a lot because it is vague. Of course, this is the bare minimum. You know, that is your bare minimum explanation about what it is. You're putting it in a high yield savings account. The bank is going off and doing things with it. You're collecting an interest rate. That's the very simple way of understanding what staking is. That is essentially staking. But there are a vast amount of options when it comes to staking your crypto and the type of different rates that you would be expecting to earn on a yearly basis. And so Continuing with, for another explanation coming out of Coinbase, is in regards to Coinbase staking. Coinbase staking is actually a bit different. You are not, in the vast majority of cases, so with things such as USDC, which is a stable coin, that means that one USDC is worth $1. Every token that exists on the blockchain, there's $1 sitting in a bank account. In the case of it, you're not actually locking up your cryptocurrency. And so if we were to go ahead and look at coinbase.com, and this is inside of the earn section as our beginning, and to see kind of what Coinbase provides. And so Coinbase has the ability for you to earn up to 9.22% APY by providing or holding your cryptocurrencies on the platform. And so one of the ones that's particularly interesting is USDC. As I had mentioned, it's just $1. It's backed up by Coinbase. It's backed up by US financial banks, and it is 100% supported. And so for every USDC token that exists on the blockchain, there's $1 in a bank account. For holding your USDC on the Coinbase platform, you are expecting to receive a 5.1% APY. And so for those that are currently sitting maybe with their savings account with maybe a Wells Fargo or a Bank of America, keep in mind you are holding your dollars there and maybe they're offering you 1%. I'd be curious if some folks in the crowd might could shout out what type of percentages they receive on their savings account with their local bank. I bet some are far higher than others, but I would imagine that the vast majority are ranging somewhere between 1 and maybe 2.5%. In the case of Coinbase, when it comes to USDC, you could technically just take your bank account, take any dollars that you do not currently need, and you could immediately and for free deposit them to Coinbase. You could then transfer or swap them into USDC. Keep in mind, you're trading $1 for a representation of $1. And then you could earn 5.1% per year solely by keeping the same dollars that you're holding inside of your bank account on Coinbase. This does not have any requirement in terms of the amount of time. It is not staked. It is not locked. It is yours to take whenever you want. But for as long as you leave it on the Coinbase platform, you would continue to receive 5.1%. And so I think many people have taken things like this and have misconstrued it as staking. This is not staking. This is an incentive program that Coinbase has devised. And so Coinbase is actually paying you just to keep your money on their platform. It is a matter of locking up USDC on the Coinbase platform, not specifically about actually taking your money and doing something with it. That's not what they're trying to accomplish. They're just trying to get more people to hold USDC and keep it on their platform. And so you can also see that through Coinbase, you have the ability to earn 9.22% on Cosmos, 6.92% on Polkadot, 5.01% APY on Solana, 4 as it continues. The reason that these specific cryptocurrencies are offered down here as earning assets is because these are primarily proof of stake cryptocurrencies, which means what Coinbase is actually doing with these is they are running a miner. They are running a proof of stake node. And they are getting paid way more than 9.2%. And they are just giving you the difference. And so this allows you to very, very easily, without a lot of risk, participate in some interest-bearing opportunities. The ability to go ahead and quote unquote stake without having actually risked much of anything or having to lock up your cryptocurrencies. Technically, if you wanted to run a proof of stake node for Cosmos, you could earn up to 15 or 16% per year. Or You could take the very easy route and you could just go ahead and hand it over to Coinbase and say, give me my 9.22% per year and not worry anymore about it. Keep in mind that that interest will be paid in the native cryptocurrency. So if you are staking Ethereum, you will be paid in Ethereum. If you are staking USDC, you will be paid in USDC. And so that is just how that one works in the majority of cases. We will talk about one or two that operate a little differently as we continue forward. All right, coming over to what is a very, very important thing to know about. When it comes to the idea of staking, impermanent loss is probably the most important concept for everyone to really grasp. Impermanent loss is when you have gone ahead and you have staked your cryptocurrency into a, say, liquidity pool, and then the price of the cryptocurrency that you staked has gone down. And so I had one Ethereum and I had enough USDC stablecoin to back up one Ethereum, and I placed that into a liquidity pool. And then my one Ethereum, the price of Ethereum goes down. Well, I staked my Ethereum when Ethereum was worth 4,000. Now Ethereum's worth 3,000. That means I have suffered impermanent loss because the price of my cryptocurrency from the moment I staked it has lost value. I now no longer can sell my Ethereum for 4K. It's only worth 3K. And so if I were to choose to withdraw from staking at that point in time, I would end up suffering an impermanent loss of $1,000. And so this is a very, very important concept. When it comes to the idea of staking, you have to keep in mind impermanent loss. The token or the coin you are placing into any staking protocol, the price of it could go up or it could go down. And so you are giving up the value as it goes down. You are making essentially a proclamation that you do not intend to sell. And so if you do not intend to sell and you do not sell while the price of Ethereum is down, then you will never suffer a loss. If you do choose to sell, then you would suffer a loss. And so that's why it is known as impermanent. It is impermanent because all you technically have to do is wait. Or at least that's the assumption. You could just wait. The price will go back up. You would no longer suffer a loss entirely based off of the fact that the markets are volatile. And so this is always something to be keeping in mind when you start to look at the idea of staking your cryptocurrencies. It's the fact that your cryptocurrency's value goes up and down. As that value goes up and down, it will affect the results of what you're capable of pulling out of it. Keep in mind, if you deposited one Ethereum and the rules of the staking pool state that you would get one Ethereum back, you still have one Ethereum. But the price of Ethereum has gone down, in which case, impermanent loss. So you still have what you started with. You showed up with one Ethereum, you left with one Ethereum. The problem is when you showed up with that one Ethereum, it was worth way more than when you decided to leave. And so I hope that that is the simplest way, or at least an understandable way of trying to wrap your head around it. Impermanent loss is a very existential concept. It doesn't really connect well with our brains, at least in my opinion. It was one of those things where I had to look at it from a bunch of different directions before it really started to absorb. The simplest way is just to view it as the idea of you making a purchase of a certain product and saying, well, I made a $400 purchase, and then the value of that product going down to $300, and then you saying that you lost $100 because you paid $400, it's only worth $300, you lost $100. It's impermanent unless you choose to sell, in which case you have then made it permanent. All right, continuing along. Now we're going to go through a multitude of different platforms that exist inside of cryptocurrency for staking. And so remember, guys, today we are just going through and looking at a bunch of these. I am going to be looking about all of these different protocols and actually choosing some for us to participate in with the community portfolio. And so today I won't be showing you how to stake. Today we're just learning about staking. We will be actually staking our cryptocurrency in the coming lessons. But the most important thing when you're doing this is to understand what you're doing. If you don't understand what you're doing, then it's that impermanent loss. Those inherent risks are going to hurt. And so first things first, let's make certain that we've got it all together. So MakerDAO is one of the oldest of the old in terms of crypto lending and staking. It utilizes DAI. DAI, D-A-I, is a algorithmically backed stablecoin. And so that is a very, very scary concept, but so far it has worked out. And that means that DAI is equal to $1. One DAI, $1. But in the case of DAI, there's not a dollar in a bank account. There isn't a dollar sitting in a bank account to back up your one DAI. Your one DAI is worth $1 because an algorithm is constantly working back and forth to maintain the price of DAI at $1. And yes, that in and of itself is a scary concept. It's not something that I'm a huge fan of. I have used DAI. I have had DAI. I do not keep my money in DAI because DAI is not backed up by an actual real world copy of a dollar. But it has for years and years and years now maintained a value of $1. And so I am not in any way poo-pooing upon DAI. DAI has succeeded. They maintain a $1 peg, despite the fact that there is not a dollar sitting inside of a bank account. But just as a little background in terms of that one, MakerDAO utilizes DAI for the vast majority of their staking pools. And so if we've come over to makerdao.com and we actually click use DAI, what we will see is their offers in terms of staking. And so they're offering on depositing DAI and earning 15%. And so that is known as the DAI savings rate, the DSR. That is a yearly rate. And so currently, MakerDAO, in partnership with Sparks, is claiming to offer a 15% return per year if you deposit DAI. DAI just being a dollar. And so you can purchase DAI, I believe, on Coinbase, and you could technically participate. And the way that they're making this happen is right over here. Borrow DAI at 16%. And so how are you making money by depositing DAI? You're making money from the people that are borrowing DAI at a 16% rate. And so this is just one of the many different staking platforms. And so we are kind of just going to roll through a bunch today, guys, just to show everyone just how varied this is. There are a million different ways to technically, quote unquote, stake your crypto. This being one of them, if you are a DAI holder, you can earn 15% annually in terms of your stablecoin. We have Aave. Aave liquidity protocol. Earn interest, borrow assets, and build applications. They currently have $17,314 million of cryptocurrency liquidity locked on their platform. And what Aave really focuses more on is crypto lending. And so what you're capable of doing with Aave is taking your cryptocurrencies that you currently hold, whatever that may be, and you are then able to come in and provide it as a loan to other people. And so when you're making these loans, there will be different rules that are placed essentially into the contract. And so, mainly in regards to crypto lending, what occurs is, say Jim needs $500 on a Thursday. Jim needs $500 on a Thursday. He's not going to get his paycheck till Friday. Normally, what people would do is they'd go get, say, a payday loan or something of that nature. What Jim is capable of doing with cryptocurrency, with Aave, is he's capable of going in and saying, I need $500 now. I need it now. I can pay you back tomorrow. What deal will you give me? And what Jim does is Jim goes ahead and he gives $500 of crypto and he puts it into a smart contract. So that means he has fully collateralized the loan. He has the money. He just doesn't want to sell his crypto. And so he goes ahead and he puts $500 of, say, Ethereum in as his collateral. It says, here's my $500 of Ethereum. Please give me $500 so that I can pay my bills until tomorrow. Jim gets the $500. He pays his bills. And then he comes back the next day and he says, okay, I'm ready to pay back the loan. He goes ahead, he pays back the $500 that he owes you, and then he pays the interest. And so if at any point Jim had just decided that Jim was going to run off, Jim wasn't going to pay back the loan. Well, remember, he gave me $500 of Ethereum. So all I do is I liquidate his Ethereum, I get my $500, and I didn't make any money, but I didn't lose any money. And so crypto lending allows you to collect an interest by making loans out to people without risking the cryptocurrency that you essentially gave to start the loan. So you aren't risking your principal. You may not make money if they fail, but you're at least not going to lose money. And so these different crypto lending platforms like Aave or many others can end up resulting in some fairly high yearly rates. And so we see that DAI coming in at 11.46, USDT at 13.82, USDC 17.66%. And so these different rates are actually based off essentially a fairly vague calculation. If you were coming in and you were regularly putting out loans, you were regularly getting your loans repaid, you could make way more than 17%. Or if you're not doing a lot with it, you could make way less than 17%. And so it really comes down to it when in regards to crypto lending, which is very often referred to as crypto staking. But when it comes to crypto lending, a lot of it is in regards to your ability to kind of keep up with things. Are people paying back the loans you've given them? The nice thing about the blockchain is it ensures you're going to get paid back. You're not going to lose money, but you may not make money. And so that does allow crypto lending to be a fairly safe means of taking the dollars that are currently rattling around inside of the savings account, the retirement fund, and start to actually earn a percentage off of them. And so each of these different loans, depending upon the platform, depending upon what you're loaning out, are going to be paid back in different cryptocurrencies. And so you also have the ability to kind of pick and choose what you want to be paid in. All right, so what is crypto lending? How does it work? And so I essentially have already gone through the vast majority of this one. Payments are made in the form of the cryptocurrency that is deposited typically and compounded on a daily, weekly, or monthly basis. All of this is going to be based off of the staking pool that you're participating in. There are two types of crypto lending platforms. Primarily, there is a decentralized crypto lenders and centralized crypto lenders. Both offer access to high interest rates, sometimes up to 20% annual percentage yield. And so it is particularly lucrative if this is something that you're interested in participating in. We will be making videos actually showing me giving out loans. I do want to make certain that the community portfolio is participating in lending, in liquidity pool providing, in the vast majority of the different forms. We're going to mine crypto, we're going to lend crypto, we're going to stake crypto, we're going to keep crypto on platforms that are incentivizing us. And so in the long run, we'll get to see all of these things in action. Right now, we're just learning. And so crypto lending, remember all of these links will be inside of the Discord. Now we come over to decentralized exchanges. And so on a platform like Uniswap, remember guys, we purchased our Pandora crypto, a small cap penny stock crypto on Uniswap just last week. But what we're going to do today is we're going to see about what Uniswap allows us to do in terms of providing liquidity. And so what I'm capable of doing on Uniswap is actually coming in and selecting, say, well, anything, in all honesty, wrapped Ethereum. And I am then capable of coming in and actually creating a position where I am staking it. And so Uniswap's platform does not really visualize this one well. So we're going to actually jump over. It's the same platform on Uniswap as it is on PancakeSwap, but PancakeSwap makes it much easier to visualize. And so we're going to come over here and we're going to look at the way that PancakeSwap has it represented. I think that will make it a lot easier to explain, because there is a very big difference between the two and how easy they make it to understand what they're trying to convey. So when it comes to these liquidity pools, when you're staking inside of an LP, what you're doing is you're putting in an equal amount of each side. And so remember when we were looking at things, we were going, well, we need to swap Ethereum to USDT. And so in decentralized finance, those are liquidity pools. We have a liquidity pool that is paired between Ethereum and USDT. And so everyone can go there and they can swap USDT for Ethereum or Ethereum for USDT. What you are doing when you stake into that liquidity pool is you are giving them an equal amount of Ethereum and an amount equal to that Ethereum in USDT. And you are giving that to the pool and you're saying, I would like to be paid a percentage for helping everyone make their trades back and forth. And so you're capable of coming in, putting your dollars in, and then passively earning a return on it. And that is done because you are providing a service. You are facilitating their trades. You are making it possible for me to show up and swap between those two different cryptocurrencies. And for doing that, I pay a fee. And you collect that percentage off of it. And so I am actually, guys, I'm not quite certain. I think that my internet maybe still be having problems, guys. And so my apologies on that one. But I had this pulled up just a little bit while earlier. And now I am looking at a bunch of blanks. So I am imagining that means that it is on my side and my internet is struggling. Let's see whether Sushi Swap has got theirs. Sushi Swap is another one of these providers that we could also go with. And PancakeSwap, though, really was the one I wanted to be able to show everyone. So I'm very unhappy to see that my internet appears to be struggling hard. And so my apologies on that one, guys. But it seems as if I am being gate-kept from being able to show y'all. Apparently, it is too powerful news to share. And so I am apparently not allowed to. And I really did want to, because some of these staked liquidity, some of these APRs are 50 to 100+%. And so the reason they are so high, though, is because they are higher risk. But was hoping to be able to show y'all that. Unfortunately, it seems as if my internet is not going to allow it. That, or maybe there's an issue on PancakeSwap side. I doubt it. I'm going to go ahead and guess, since my internet crashed earlier, that it's probably my computer's fault. And so we'll continue forward then. Sushi Swap, another option of a place where you can actually go and you can stake or bond your crypto. Bonding your crypto, I thought, was a particularly interesting idea. And so Sushi bonds allow you to acquire tokens at a discount from the current price, but those tokens will not be released until a specific time period has passed. And so currently, there are 3 bonds available on Sushi Swap. There's a bond for NPM, and there is a bond for Arbitrum, ARB, and it allows you to actually go ahead and make a purchase ahead of time at a discount. And so right now, you could purchase NPM for 15.55% below current market rate, but you will not get your crypto for 7 days. This one's an interesting one, guys. You are capable of coming in and you are purchasing NPM at 15.55% below current market rate, but you do not receive the NPM that you have paid for 7 days. And so this is another one of those different ways that you can play around with. I thought this one was just particularly interesting. What Sushi also provides is the ability to stake. And so if you come in to Sushi, you have the ability to come in and essentially stake any different cryptocurrency, primarily Sushi, to my knowledge, on their platform that you would like in order to be paid in X Sushi. And so this is another one of the different forms of staking that exist out there. It really is, guys, what I'm trying to convey today, essentially the skinny of it, is that staking is way more than just the word stake. When someone says staking, or we want to learn about staking, that leaves a whole lot of room. See, what you could mean is you could mean like on Coinbase, where you just leave some USDC sitting there. Or you could mean it's like MakerDAO, where we're using our DAI in order to earn 15%, and then Spark and MakerDAO is utilizing our money to do other things. Or you could mean like Aave, where we're taking our money and we're placing it in to a pool in order for it to be lent out to people who need money, in which case very often referred to as staking. Or you could be coming over to Uniswap and you could be providing an equal pairing of 2 different cryptocurrencies in order to earn an interest off of liquidity, in which case you're staking. You could be doing the same thing over here on PancakeSwap, in which case you are staking your cryptocurrency in order to earn an interest rate off of the trading volume. Or you could be over here on Sushi, where you could be staking Sushi in order to help back up and support the rest of the network in order to earn X Sushi, which makes it a completely different form of staking at this point. And so that's kind of what we're going through today. That's the reason that we're not specifically going through and actually staking our crypto. I'm trying to paint a picture of just how huge a term staking is. It is way more than what you've probably been told by someone. Someone has probably said, oh yeah, I have my crypto staked over here. What I would ask them is, what does that entail? Is your crypto stuck there for years? Can you leave whenever you want? And another one of these different options is Lido, which is liquidity for staked tokens. And so Lido has currently a total staked of $34 billion worth of different cryptocurrencies, and they're offering percentages and that essentially allow you to double dip. And so Lido is focused on letting you go in and say, okay, I would like to participate in Ethereum mining. And so I put my Ethereum towards mining, but I would also like to kind of double dip. I would like to utilize my Ethereum to earn a little bit extra. And so Lido has focused on providing that service. Lido is allowing you to take your staked Ethereum and then use your STETH Ethereum in order to earn 3.3% APR. And so this is a whole other little ball game of what staking can entail, where now we are mining with our Ethereum, but we are also staking on top of that. We're staking a mirrored asset, a tokenized form of our actual liquidity. Or you could go all the way over here to Curve.fi, which also offers the ability for anyone to stake and to participate in a far simpler fashion. And so I do appreciate how Curve actually has just made this easy. They're like, this is what we want. This is what we're offering. Here are what the rewards end up coming out to in Curve. And so when you stake on the Curve platform, you're actually going to be paid partially in the crypto you staked, but you'll primarily be paid in Curve. Curve is the crypto token of this platform. And so, yet again, we have entered into a situation where staking has become even more vague. Oh, Kukla, thank you so much for joining. I am sorry if I missed getting to say goodbye, but I will be seeing you later tonight, Kukla, at Whiskey and Wisdom, because I am wearing the shirt, because I will be live with the original Mark Z at 8 p.m. Eastern Standard Time. And so I will be there also. All right, continuing on forward, stakingrewards.com. This was one that I have brought up here and that I am just showing everyone so that those that are interested in kind of seeing more of a picture of all the different options out there. You're capable of coming in to stakingrewards.com and actually sorting everything out. So you're capable of coming in here and sorting out how you're looking at the different protocols, the different cryptocurrencies. You're capable of looking through the different providers. Lido Finance, that's actually the one we were just looking at right over here. We can see that Lido Finance is currently #1 in regards to stakingrewards.com. But this platform allows you to go through and kind of get information about what is going on across all of the different staking platforms. And so it will be included, of course, inside of the daily links so that everyone can go in and have that resource whenever they see fit to use it. And then, of course, as we kind of go towards the very end of the show for this evening, because I do have to jump back on at 8, we have Crypto Quant for our daily update. Crypto Quant, we are seeing absolute positivity over on the exchange side. We're seeing the vast majority of people moving their crypto off of the exchanges into their hardware wallets. Remember, that's a good sign. If people are taking it off of Coinbase and they're putting it on their Ledger hardware wallet, that means they don't plan on selling it anytime soon. And so we're seeing positivity there. The other one that we're seeing particular positivity on is that the ETFs have stopped. Grayscale has massively slowed down. All the other ETFs have slowed down. As a matter of fact, the ETFs are buying more crypto than they are selling it right now. So that is another net positive for the bulls. If you're planning on the price of crypto going up, this is more good news because finally Grayscale has decided to quit trying to put the brakes on the Bitcoin bull. In terms of what we have seen as being somewhat negative, U.S. consumers are not buying a lot today. And so why? Well, most likely it's because it's a Wednesday. And I can't really imagine that there are but so many retail and average investors. Keep in mind the Coinbase Premium is based off of the average US investor, primarily retail investors. That's you and me. We are just your average Joe. We're not a financial institution. Their dollars, their purchases go through a whole different exchange. This is specifically talking about retail investors. In my mind, this metric makes a lot of sense. It's Wednesday. It's 2 days away from payday. And so people probably aren't going in and spending a lot of their money on cryptocurrencies. So I don't really look too much at that one and worry about it. Of course, we see the same in Korea. For some reason, the Koreans are also not really deciding that today's the day to buy. We have average news coming out from the miners position. That means that miners are not really dumping. They're just covering costs. They're selling enough Bitcoin to pay the power bill. That's all they're worried about. And of course, we have a million different things as we continue further down. But the only other one that I wanted to look at real quick, unless anyone does want to dig into some of the other metrics, is the long-term funding rate. And so the vast majority of traders are setting themselves up into short and long positions that are designed for the long term. That's just an indication from your average stock trader in the cryptocurrency space, the people that are making multiple trades a day. Those people are not gambling right now. The only thing they're betting on is that the price is going to go up. And so I'm seeing a lot of very, very bullish sentiment. I mean, when it comes down to it, the ETFs have quit outflowing. They've quit selling on us. The traders have quit shorting the market, another amazing sign. And so that means there really is no impediment to the market going up. There is no impediment to Bitcoin's price continuing to climb because we're not seeing institutions selling on us and we're not seeing any issues with traders. That means the only thing that can push our price down is the average everyday you and me, us selling. And we are just not big enough to really have a huge influence on the market. And so I consider this to be particularly good news all around. And I'm looking forward to what the end of this week has to say for the crypto market. And so with that, though, guys, I am going to go ahead and make a small announcement right here at the end for those that have still stuck along that we are going to be having a Robinhood video also coming out. The reason being is because there are a decent amount of folks who made purchases of cryptocurrency many, many months ago, many years ago, and they are currently stuck on Robinhood. And so we are going to be having a video coming out in the near future that is just a bit of a tutorial on Robinhood. Also, guys, because of what we learned at the beginning of today's lesson, we are going to be having a video on Hedera and XDC. And so we are currently stacking up a fairly large amount of recorded videos. And so that is going to be a mainstay of a lot of the different lessons from this point forward. I'm going to try to go through and do things like today where we just give a general idea. We just learn a little bit. We get some information. We can start absorbing it when it comes to these big concepts. And then we're going to hammer down on the finer points through recorded videos where everyone's capable of going back, rewatching it, pausing, looking at it, things of that nature. And so expect that to continue to be a trend in terms of the videos where we're really just going through and giving a really general picture on the live stream, and then we're focusing down on the recorded video. And so thank you guys so much for tuning in this evening. My apologies for the technical difficulties. It seems as if I do need to check on my internet and make certain that that is all set before Whiskey and Wisdom. And so I hope that everyone is capable of joining later this evening for that show. I know that it's going to be myself, the original Mike Z, and Mike Barra is going to be showing for tonight. And so kind of the normal Whiskey and Wisdom cast. So please do tune in if you do have the availability. If not, look forward to a recorded video or two coming out from the Crazy Kryptonaut tomorrow. And so at the minimum, you will be getting one video tomorrow. If everything goes the way I'm hoping, you should be receiving 2 recorded videos tomorrow, probably somewhere around the 5 to 7 p.m. Eastern Standard Time if I were a gambling man. And so look forward to those. And also, of course, we will be back with the news, and we will be playing around on Friday at 5 p.m. Eastern Standard Time during our live stream. And so I have something a little fun planned for that one. We'll see. It really will depend on whether we need to hit some other topics first. If we don't have any other topics come up, I think that what we'll do is we'll actually launch a cryptocurrency on Friday, just so that everyone can watch it happen. And we'll name it Valentino, and we'll launch Tino token on Friday during the live stream. That is currently my plan, unless we do have something come up that we need to cover. So thank you guys so much for tuning in. I see there at the end. Thank you, Petrichor, for joining us. Thank you, Trish. Thank you, David and George and Sunrise and Charlene and everyone else. Thank you so much for tuning in. I will talk to you soon, hopefully at 8 p.m. Eastern Standard Time on the original Mark C. So thank you, guys. You have a great night.